Are you also one of those people who take trades after multiple confirmations but still hitting SL and getting difficult in finding consistency? So my name is Mick, and in this video I'm gonna talk about this problem and why this happens and how to correct this mistake. So let's start this video. So why this problem comes in trading is because most of the people are trying to trade without a context. So, and in this video we're going to discuss how to make a context before taking any trade. So the first point is market condition. So there are basic two market conditions. The first one is sideways market and second one is trendy market. So first let's cover sideways market. Sideways market is basic, like price is stuck in a price range like this one, and when it tries to break this and doesn't sustain and reverse back to another point and then doesn't sustain here and reverse back to another point, opposite area. So price just stuck in a range and just up and down is going on. There is no higher high and no higher low in this formation, whereas in trending market there is a higher high, higher low and higher high and higher low formation continuous. So what price does is just breaking previous high and setting a new low for a price, and this continues. So first one is market condition. So second one is price behavior. So for price behavior, what I mean is we want to see from where price is coming. First we have to identify what is the market condition. Let us suppose we have a sideways market condition. Then we have to see where price is coming from. Let's suppose price is coming from has taken previous low and coming back to the range. So we are not gonna short here. We are not looking for short here. We are gonna long here because the price is in sideways market, and it has hit a resistance, some support, and maybe taken some old low and external liquidity. So there is a high chances of reverting back to opposite side of liquidity or resistance. So let's suppose in trendy market price is at this point, and it's showing some rejection from here. So this is the discount zone plus some liquidity, internal liquidity or some order block something here, and price took that order block and start rejecting towards high. So what we are going to do here is we are looking for longs. We are not going to sell here. That's the price behavior. We have to understand from what is the market condition, and first one is market condition, like what is the market condition, trending or sideways. Second one is price behavior, like from which point price is coming, so that we can trade our idea there. Third one is drawn liquidity. So what is drawn liquidity? Basic means let's take same example like the price coming from here. So basic price drawn liquidity here will be this high. At least we're gonna target this high. This high will be the first target for this trade. And in sideways market, we will take the same example. If it coming from here, then this high, and this high. These are the basic TPs for this trade. That's it for this context. We need nothing else. First one is we need to know about market condition. What is market doing, sideways or trendy. Second one is price behavior, from where price is coming, and third one is drawn liquidity, where basically price can go. All you need is to add these things. Basically you have to check this on higher time frame, and on low time frame for entry you can use any basic entry pattern you can find on YouTube also. So based on previous context idea, I will show a trade breakdown which I took today only. It was a long trade on this Euro USD. So first of all, let's start with the monthly time frame. And monthly time frame, you can see price coming from this FEG, this monthly FEG, and it has taken this high. So this is the monthly candle, and there are still 9 days left to for this close, and we are pretty much bullish. You can look at the size of candle; it's like very bullish candle. So same, we drop down to weekly time frame. On weekly also, you can see after taking this FEG here, this bullish FEG here, we continue upside, and it took this high. So more drawn liquidity can be these highs, these upper highs. So let's mark this also. So on daily time frame, if you see, we have taken this FEG. You can see this FEG, and we continue upside. So for upper side, what can be the easy targets? This high. If we little go back to more information, you can see this three down up close candles. This become a order block here. Let's mark this also. We will take the extreme candle low, and this whole can be order block, but I am marking this. And plus this have this FEG also. So this POI or order block is high probability. So how I build a context here is, first of all, what market does doing here. It break this high, a higher high here, and a higher low here. Again break this high, a high, another higher high, another lower low. Again break this high. So this is a trendy market here. Sorry, you can see this is a trendy market here. First of all, we define trendy market. Second, where price is coming from. So price is coming from this FEG, you can see, and where price can go, this high, this high, and this order block for extreme target. We build our context. First of all, market condition plenty, where it's coming from, daily FEG, where it can go, these higher highs, sorry, these old highs. So I will drop to 1 hour time frame. So this is the 1 hour time frame. You can see we were in consolidation for a long time. You can see this consolidation, and we give a strong breakout here. You can see a basic breakout. You can expect. You can say a basic breakout here. We start closing and didn't retrace back, and there was no chance of fake out here. Fake out will be something like this, gone up and didn't sustaining and just reversing back to the range, and we can target some old lows. But it was making higher high. So after this breakout happened, this FEG, this 1 hour FEG, we can see, and I was waiting for London Open, which is at 2 a.m. and we respected this FEG. You can see in daily opening also only it was respecting this FEG. So I just dropped down to 5 minutes. You can see price took the liquidity here, and there is order block here. So if so we are at 1 hour FEG. We have a 5 minute order block also. So it was I was just waiting for it to make some higher highs to enter this trade. It broke the high here. Wait, I didn't mark it. So this was the internal high break, and this candle closure was also good. I took some entry at next candle, some like this, and my stop was here, and target was simple this high, and this was a simple trade. I posted execution on Twitter also, and after this market gone sideways. So this was all about context and with a trade example also. I will post. I will make sure to show breakdown also. You can watch it here only on screen. And that much pretty for this video. I hope you understand the concept, and I I explained it pretty much, so you can give feedback also in comment section. Thank you for watching.